Well, you know what? I'll just move on with it. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hello, everybody. My name is Wayne McDonald. I am super excited that you're here this morning because it's Thursday, the best day of the week. So we got things like setting up all of next week, setting up the rest of the month, talking about next year. So anyways, I love Thursdays. Thursdays are great. So what are we going to do today? Probably just focus on technical analysis on day trades. We're looking at maybe hitting targets for getting out of position and swing trades, that kind of stuff. Also, speaking about swing trading, I must also say that today is the day for the swing trading group to meet. So we're meeting at 2 p.m. Eastern time to set up trades that are 150 to 300 pips each. So if you're interested in that kind of stuff, fxbootcamp.com, you join, you join the video training courses, and then it says, hey, buddy, wink, wink, nudge, nudge. Would you like to join the live group? So that's how you do that. So what else should we do besides day trading and swing trading? Talk about the fundamentals. We've done that a lot lately. We've done a lot of trader psychology, that kind of stuff. So I don't know how much more you want to do. Oh, by the way, there's the bachelor's degree. And the master's is above. Master! So anyways, it's getting there. I know it's off center. Thank you for noticing that and pointing that out. I appreciate that. Yes, it's 1 centimeter to the left too far. The minions will work on that. So thank you for being here. Thank you for being a subscriber of the Forex.Today YouTube community. Thank you for the hard work that you put in every day. Thank you for the respect and the loyalty that you show me every day. I appreciate that. Also, if you could like, subscribe, and comment on the videos, it tells YouTube this is quality content. And also, if you could visit tradersway.com, they're our sponsoring broker, and they would also like an opportunity to earn your loyalty and respect by providing you world-class customer service, fast execution speed, huge swaps, narrow spreads, and really sort of the business model of putting you first and, in fact, putting your success first above everything else. So if you like that in a business partnership, because remember, when you have a successful Forex trading account, it's really a business, and you need good execution partners for that business to be to maximize its profitability and efficiency. So go with somebody you trust, tradersway.com. Thank you, tradersway.com. And here we are on my Traders Way account. Very nice, very nice. So, as you know, yesterday I moved all my stops on all my trades to 333 pips profit each. And I got knocked out of 2 of the trades. I think it was pound dollar and pound yen. So, sad, right? Sad. Oh, sad. It's sad. They're gone. My babies have left me. So that's all done. And then about the same time, I looked at my charts and said, look at that, day trade. Boom. So I took a shot. And so here I am on Aussie dollar, filling the void of my my babies. My baby's leaving. Okay. When did you join FX Bootcamp? If it was more than a year, it's gone, bro. It's gone. That's why it doesn't exist. Okay. So, yo. Okay. So, any questions about this day trade? Let me get the drawing tool. Nice thing about if you're trading properly, you should be able to read my mind and say, oh, I totally understand that trade. Perfect. Now imagine someone looked at your trading like this. Could they read it and understand what you were doing? I don't know. Okay. Any questions about this? By the way, I'd like to also welcome, I always forget, our Twitch viewers and our Facebook viewers. Guten Morgen. Ja, guten Morgen to you all. All y'all, as they say. Yeah, it's, oh, good point. Good, okay. We talked briefly about stochastics, was it yesterday? This is part of it. Now, before you look at this, because that's the fallacy. A lot of traders say, this means sell, this means buy. I know you're sold that nonsense, but that's not how that works. Anyways, piecing this together, the first part is I'm a bull. Why am I bull? Because I'm bearish on the dollar. I know it's overly simplified, but that's that. The second thing is, okay, we did a breakout yesterday. Okay? Third thing is the way that you trade a breakout is you look at this roll reversal and you want to buy around there. And then the fourth part of this is simply a day trading buy zone. And then the last to all of this, what color? I need a new color. So I bought it right here. Okay. So you can consider it on a day trading basis, an Asian fade. Okay. You see? Asia fade, front running London. London boys take it up, and it's all about history. So I could be exiting right here for a day trading profit. You see what I mean? You see that? So very textbook. There's my entry. This is the conservative profit target. So I could just be done for the day. What did you do today? Made money. Okay. So I don't know. Was that a 5-part answer? How many parts were there? Cool. Thank you to those that are following and liking and all that. I appreciate that. By the way, Maida, I spent all the tips you put in the tip jar on cigars. They'll be on their way. Probably I'll have them next week. So thank you for that, Maida. Yes, happy birthday, RC. Is anybody watching on Twitch or Facebook right now? If so, say something in the chat. Just say something. Okay. All right. So that's that. I hope that was helpful. Just a boring, simple day trade, but that's how you do it. And the question was, oh, and I forgot. Yes. And then the Stokes kicker. So the most important part, like where does Stokes come in? Okay. First of all, my bias is first. Second is breakout. Right? Third is pullback into a buy zone. And then fourth would be the Stokes kicker. There you go. That's what I forgot. Okay? That's when the Stokes becomes important. And it's not that it's below the 20 line. It's not the cross up. It's the re-entry back into the buy zone. That's why I marked this. See, it's not here. It's right. If I could draw this straight, actually I can. I have a tool for this. Okay, it wasn't here that mattered. You see how that was a bit early? I mean, it worked out now, so you could say, oh, well, you could have been so good. And well, the problem is, right? All right, Maida, then you bought me wine. How about that? What's up, Free Pumpkin 123 from Twitch? Yeah. Does time frame matter in Stokes? Well, they measure the same thing. Okay, so time frame doesn't matter about anything because they're just measuring. Okay, let's do a quickie here. It's measuring this candle relative to the previous few candles. Now, depending on your settings, right? But all it's doing is measuring, are we making lower lows and lower highs? So hang on, let me move this up so you can see a little bit of both. Okay, are the candles making lower lows? Okay, so the first part of this actually is no longer making higher highs. Then we get a bearish engulfing candle, then we get a second one. Okay, now we're in this period here. Okay, down, down, down. So all it's suggesting is candles are making lower lows and lower highs. And then we get to a point where we're no longer making lower lows, but we're not making lower highs, neutral. Then we're not making lower lows, we're making lower highs, cross up. Okay? And then we get this down. It's not a lower low, nor is it a lower high. So that's why it's just farting around. And then no lower low, no lower high, then, right? But the thing is now, because my settings are so sensitive, because this is to measure price action, you might have different settings and they would tell you different, okay? But because I'm dropping this candle and this candle in my settings, now this is higher than the others and it says game on. Now, this would be irrelevant information if I wasn't at support wanting to buy anyways, okay? This oscillator used improperly will lead to your mediocrity. Okay? So again, some guru sold you a course on online, and this guru told you something like, "Oh, trading's easy. You sell, right? You sell here and you sell here, and then you buy here." But the problem is, you can see it failed, it failed, it failed. Okay? And now what do? Okay? So you have to put it into context properly. Okay? There's more to it than being overbought and oversold. And then the next question was, does time frame matter? Is it better on the 4-hour 21 or 4-hour chart versus 1 hour? Well, it's telling you the same thing. Okay? Up, 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 down, down. Okay? And if you're treating this as a bull, that would be support, right? And then you get this pullback. That's a judgment call, not quite. But on this time frame, it's been so beautiful that even it never actually becomes oversold. Isn't that amazing? Yes, we can do ECB. Yes. Yes, we can do that in a second. Okay, you see that? That it's never actually became oversold. So maybe, if anything, it just gives you confidence to stay with it. Okay, what do you think? Then when you change this to have like MACD with it, you can see MACD is doing something similar. Not really, but you can interpret it in a similar fashion, but instead of overbought and oversold conditions for price, you could use it as overbought and oversold conditions for the market. Okay. Okay. Yeah, Johnny, that's a good one to have. It's a good mantra. Okay. So as a specialist, if you specialized in this, do you think you could catch these moves? Especially if you could only be a bull? I don't really care what technique you used, right? So anyways, everything else is fine. Everything else is fine. I almost sold Rand last night, and then I'm like, nah, good thing. That was a good call. Euro's just sort of recovering. It's staying on its... well, I guess this is how I'm looking at Euro. Let's do it this way. Let me get rid of that. I need this to break up soon, or I don't think it's going to work out. That's all. Because remember, the goal here is to get it to R2, and we kicked off like a triple top off M4, so that bothers me. Well, Johnny, remember, we're not price focused, we're time focused. So I'm trying to hang on without taking undue risk. So like I said, on the pound dollar and on the pound yen, I got knocked out for 333 pips profit each. And I did that because I wanted to stay in, but the volatility was crazy, right? That thing was, both of those were moving 150 pips up and down day by day by day. So what I didn't want to do was suddenly only have 200 pips profit, right? So what I did was I just locked in what I expected to be reasonable. So like one of the things we talked about is risk reward measured through the Sharpe ratio. And imagine, so I took 333 pips and risked in the early beginning of those trades a maximum of 33 pips. So risked, I didn't actually lose it, right? So you wouldn't count it as a Sharpe ratio, but you certainly could look at the risk reward ratio, you know, being 100 to 1, not bad. Sorry, I guess it's 10 to 1. Sorry, 10 to 1. Risk reward ratio, or 11 to 1. You're like, okay, pretty good. So I didn't want to give that up, and I don't want more volatility. So it's sad to get knocked out on a pullback. See, that's the thing. It wasn't an extension up to 333. It came back and knocked me out for only 333. So it's very disappointing. But that's what comes with the pound yen and the pound dollar, especially around Brexit news, right? Up 150 pips, down 150 pips, up 100. So I just didn't need that volatility. So now, you know, I'm still trying to stay strong on the other trades. Again, not necessarily on price, but on target. Or sorry, on price, not price, but time. And I have locked in the same 333 pips. So it's the same thing, like I'm still carrying a 11 to 1 risk reward ratio, but I'm just trying to stay long so that in this case actually target, right? Actually target the weekly, which actually drifts us down to the R1, R2 combo I don't know if it's going to happen, but a stimulus announcement or something could do it. The Fed says something, great, that could do it. If not, I'm already done for the year. So you can think about it that way. I'm already done for the year. I just don't know if I'm going to get out at 22.5 or at 22. 22.5 would be nice, but ultimately it's just icing on the cake. Okay. Okay. La 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 la. 500 beat. Cool. So let's bring that up. Hang on. Bottom, bottom. So check out what I got. Isn't that neat? You notice there's no window? Is that cool? Isn't that great how it floats over the player and stuff? So let's start here first. Okay. So some strength, which is what I want to see. I want to see dollar down though. What the ECB needs. Yeah, Swissies, I've been staying away from Swissy all year, Henry, but you're right. I think it must be money leaving UK and going to Switzerland. And it could just be giant banks, like literally Barclays moves some of their assets over to Switzerland just because they need to, just a risk management of Brexit. It could be stuff like that, but it's unusual. I'm telling you, it's unusual. I'm just missing something. So I don't know if that means I'm wrong on something, but I think it's very unusual. Based on my experience, Swissy would be weak in this scenario. But I don't really have experience with negative interest rates versus negative interest rates and all that kind of stuff. So, I think it's just fair. Like, I don't know why, therefore I don't trade it. Very similar to crosses, right? Like if I'm scalping today or if I'm day trading, I would feel more confident in cross trades like pound Kiwi or something, right? But I typically don't trade those because I'm typically a macro trader, right? And therefore the macro part doesn't help me with that because that, a cross is to me a relative strength trade, not a macro trade. But I could do it, right? So if I don't understand why Swiss is going up, it doesn't matter why it's going up. If I don't understand why, then I have no edge. I have no alpha. So just besides maybe selling pound Swissy right now, I probably wouldn't do it at all. But clearly you can look at this and say, oh, pound Swissy is amazing. But that's a relative strength move more than a macro. All right, here we go. Can you guys hear her? Let me know. I can't hear her yet. Hang on. I'll turn her up.
So we're good? Excellent. Ladies and gentlemen, the Vice President and myself are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Executive Vice President, Mr. Valdis Dombrovskis. While the rebound of economic activity in the third quarter was stronger than expected, and the prospects for the rollout of vaccines are encouraging, the pandemic continues to pose serious risks to public health and to the euro area and global economies. The resurgence in COVID-19 cases and the associated containment measures are significantly restricting euro area economic activity, which is expected to have contracted in the fourth quarter of 2020. While activity in the manufacturing sector continues to hold up well, services activity is being severely curbed by the increase in infection rates and the new restrictions on social interaction and mobility. Inflation remains very low in the context of weak demand and significant slack in labor and product markets. Overall, the incoming data and our staff projections suggest a more pronounced near-term impact of the pandemic on the economy and a more protracted weakness in inflation than previously envisaged. In view of the economic fallout from the resurgence of the pandemic, today the Governing Council recalibrated its monetary policy instruments as follows. First, the Governing Council decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to but below 2% within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamic. Second, we decided to increase the envelope of the Pandemic Emergency Purchase Programme, PEP, by 500 billion euros, bringing it to a total of 1,850 billion euros.
It's only euros.
We also extended the horizon for net purchases under the PEP to at least the end of March 2022. In any case, we will conduct net purchases until the Governing Council judges that the coronavirus crisis phase is over. We will conduct our purchases under the PEP to preserve favorable financing conditions over this extended period. We will purchase flexibly according to market conditions and with a view to preventing a tightening of financing conditions that is inconsistent with countering the downward impact of the pandemic on the projected path of inflation. In addition, the flexibility of purchases over time, across asset classes,
I just love
and
Lagarde.
among jurisdictions,
She's so cool.
will continue to support the smooth transmission of monetary policy.
I look at her and I think she's Catwoman.
If
from
favorable
Batman.
financing conditions can
see
be
her in a
maintained
full
with
leather
asset purchase flows
outfit.
that do not exhaust
With a whip.
the envelope over the net
Madame
purchase
Lagarde.
horizon of the PEP, the envelope need not be used in full. Equally, the envelope can be recalibrated if required to maintain favorable financing
She's cool,
conditions
though.
to
I
help
just-
counter the negative
think she's cool.
pandemic shock up to the path of inflation. The extension of our PEP purchases over a longer horizon reflects the prolonged fallout from the pandemic.
I just like her hair. That's what my hair looked like last week before I got a haircut.
It allows for continuous market presence and more durable support from our monetary stimulus. Preserving favorable financing conditions over the pandemic period will help to reduce uncertainty and bolster confidence, thereby encouraging consumers.
Well, Angie and I got together at Harvard, or got along, I should say, not got together.
The economic recovery and helping to offset the downward impact of the pandemic on the projected path of inflation.
Shug's
we
like,
also
what?
decided to extend the reinvestment of principal payments from maturing securities purchased under the PEP until at least the end of 2023. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance.
By the way, if you guys are on Twitch,
Third,
please subscribe. I'd like to get to
the
50
Governing Council
subs.
decided to further recalibrate the conditions of the third series of targeted longer-term refinancing operations, TLTRO 3.
Actually,
Specifically, we decided to extend
what's his
the
name?
period
The
over
French
which
guy.
considerably more
He was
favorable
awesome.
terms will apply by 12 months until
what
June
was his name?
2022. We will also conduct
Who was
3
the guy
additional
before Mario?
operations between
He was great.
June and December 2021. Moreover, we decided to raise the total amount that counterparties will be entitled to borrow in TLTRO 3 operations from 50% to 55% of their stock of eligible loans.
Right now, Euro's doing well.
In order to provide an incentive
Before Mario
for banks to
Draghi.
sustain
What's
the
his
current
name? I just
level
can't think of
bank
the
lending,
French guy. He was
the
totally
recalibrated
cool.
TLTRO 3 borrowing conditions will be made available only
It's slipping my mind.
to banks that achieve
He was great,
the
though.
new lending performance target.
You
The
could just
extension
tell
of
that
the
he'd hit on all the
pandemic-related
girls
low interest rate
at
period
the ECB
and the
meetings.
TLTRO 3, the addition of more
was his name?
operations and
Not
the increase
Holland.
in the amount that can potentially be borrowed will preserve the very attractive funding conditions for
Bullish
banks.
integrity going up. Yeah, sure, Ali.
This will help to ensure that they can continue to offer favorable lending conditions and have ample liquidity to extend loans to households and firms. Fourth, we decided to extend to June 2022
Trichet.
duration
Sorry,
of the
there you
set
go.
of
Trichet.
collateral easing
Trichet,
measures
he was
adopted
super
by the
cool.
Governing Council on
He's like,
the 7th and the 22nd of
Mr.
April
Trichet, what did
2020.
you and the governing council
Extension of
discuss
these
at
measures will
the
continue
weekend
to ensure
meeting?
that banks
Well,
can
first we
make full
drink
use of
and
the
then we
Eurosystem's
smoke.
liquidity operations, most notably
And then we
the
do this
recalibrated
finance thing.
TLTROs.
It is okay. But
Governing Council
we are
will
going. We
reassess
decide
the
to do
collateral easing
nothing.
measures before
You're
June
like, you did nothing?
2022,
Yes, and we will
ensuring
continue
that
to do nothing
Eurosystem
but drink
counterparties'
and
participation
smoke.
in TLTRO 3 operations
Yeah, he was super
is
cool.
not adversely affected. Fifth, the Governing Council also decided to offer 4 additional pandemic emergency
Just in to
long-term
conclude
refinancing
Euro strength,
operations,
well, you can see right
TLTROs,
here, it's been
in
strong
2021,
since yesterday.
which will continue to provide an effective liquidity backstop.
So let's move over here.
Sixth, net purchases under our asset purchase program will continue at a monthly pace of 20 billion euros. We continue to expect monthly net asset purchases under the APP to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates.
So like on this one,
We also intend to
you
continue
can see
reinvesting
perfect
in
central.
full the principal
So we're on
payments
our way
for
to
maturing
R2. I mean,
securities
that's pretty
purchased
standard,
under the
right?
APP for an
I
extended
just bail out
period
at
of time
27. I
past
don't
the
really
date
care.
when we start
So that's pretty
raising
obvious.
the key ECB interest rates. And in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. Seventh, the Eurosystem repo facility for central banks, Europe, and all temporary swap and repo lines with non-euro area central banks will be extended until March 2022. Finally, we decided to continue conducting our regular lending operations
So you can see we're at the challenge point right here.
With full allotment at the prevailing conditions for as long as necessary. Separate press releases with further details of the measures taken by the Governing Council will be published this afternoon at 3:30. The monetary policy measures taken today will contribute to preserving favourable financing conditions over the pandemic period, thereby supporting the flow of credit to all sectors of the economy, underpinning economic activity, and safeguarding medium-term price stability. At the same time, uncertainty remains high, including with regard to the dynamics of
check
the
out
pandemic
the Twitch
and the timing of vaccine rollouts. We will also continue to monitor developments in the exchange rate with regard to their possible implications for the medium-term inflation outlook. We therefore continue to stand ready to adjust all of our instruments as appropriate to ensure that inflation moves towards our aim in a sustained manner in line with our commitment to symmetry. Let me now explain our assessment in greater detail, starting with the economic analysis. Following a sharp contraction in the first half of 2020, Euro area real GDP rebounded strongly and rose by 12.5% quarter on quarter in the third quarter, although remaining well below pre-pandemic levels. The second wave of the pandemic and the associated intensification of containment measures observed since mid-October are expected to result in a renewed significant decline in activity in the fourth quarter, although to a much lesser extent than observed in the second quarter of this year. Economic developments.
I missed Odie's question. What is a central? It's a pivot point?
With activity in the services sector.
So buying it off the central pivot point means RT. So it's part of pivot point trading strategies.
And mobility than activity in the industrial sector. Although fiscal policy measures are supporting household and firms, consumers remain cautious in the light of the pandemic and its ramification for employment and earnings. Moreover, weaker balance sheets and uncertainty about the economic outlook are weighing on business investment. Looking ahead, the news of prospective rollouts of vaccines allows for greater confidence in the assumption of a gradual resolution of the health crisis. However, it will take time until widespread immunity is achieved, while further resurgences in infections with challenges to public health and economic prospects.
So the cool thing, guys, is whether you're on Twitch, Facebook, or YouTube, I can see your chat.
The Euro area economy should be supported by favorable financing conditions, an expansionary fiscal stance, and a recovery in demand as containment measures are lifted and uncertainty recedes. This assessment is broadly reflected in the baseline scenario of the December 2020 Eurosystem staff macroeconomic projections for the euro area. These projections foresee annual real GDP growth at minus 7.3% in 2020.
I like how they still call it growth.
3.9%.
Our growth is negative 7%. I'm like, that doesn't sound like growth.
In 2022. And plus 2.1%.
How much did your bank account grow last year? Negative 7%.
Compared with the September 2020
it sounds like a loss.
Economic projections, the outlook for economic activity has been revised down in the short term, but is seen to broadly recover to the level projected.
So look, this is exactly the same trade that I did on Aussie.
Over the medium term.
But I already got trades on this, so
Overall,
how many do you need,
the
right?
risks surrounding the euro area growth outlook remain tilted to the downside, but have become less pronounced. While the news about the prospects for vaccine rollouts in the near future is encouraging,
Thank you, Twitchers.
downside risks remain related to the implication of the pandemic for economic and financial conditions. According to Eurostat's flash estimate, euro area annual inflation remained unchanged at minus 0.3% in November.
Okay, let's
On the
move over
basis
to
of oil price
euro.
dynamics and taking into account the temporary reduction in the German VAT rate, headline inflation is likely to remain negative.
I'm going to put
until
this
early
on day
2021.
trading bullish.
Thereafter, it is expected to increase owing to the end of the temporary VAT reduction in Germany and upward base effects in energy price inflation.
See, drag this across.
At the same time,
Ciao.
underlying price pressures are expected
Insert
to remain
indicator,
subdued
custom,
owing to weak demand,
price action pivot points.
notably in the tourism and travel related sectors, as well as low wage pressures and the appreciation of the euro exchange rate. Once the impact of the pandemic fades, a recovery in demand, supported by accommodative fiscal and monetary policies, will put upward pressure on inflation over the medium term. Market-based indicators and survey-based measures of longer-term inflation expectations remain at low levels. This assessment is broadly reflected in the baseline scenario of the December 2020 Eurosystem staff macroeconomic projection for the euro area, which foresees annual inflation at 0.2% in 2020, 1% in 2021, 1.1% in 2022, and 1.4% in 2023.
Why is euro going up? Because it's creating inflation.
Macroeconomic projections. The outlook for
Remember,
inflation
it's not the
has
reserve
been
currency.
revised down for 2020 and for 2022.
Plus, they're also
Turning to
putting
the
money in
monetary
people's
analysis.
pockets.
The annual growth of broad money, M3, remained broadly unchanged at 10.5%.
I told you years ago what they needed to do is corner the market on oil,
supported by the ongoing
drive up
asset
oil
purchases by the
prices, and they'll get their
Eurosystem,
inflation.
which
Instead
have
of
become the
devaluing the
largest source
currency,
of money
they could
creation.
increase the things that create
In the context
inflation.
of a still heightened
And then, of course, sell it at a profit.
preference for liquidity in the money holding sector and a low opportunity cost of holding the most liquid forms of money, the narrow monetary aggregate M1 continues to be the main contributor to broad money growth.
Cash, baby. M1,
The growth
cash.
of lending to the private sector has plateaued, while still recording higher growth rates than prior to COVID-19 pandemic.
All right, so
Following
why do they
strong
need
increases
inflation?
in the early months of the pandemic,
Because that
the
would
annual growth
devalue
rate
their
of
currency.
loans
It's the other way
to
around, right? So,
non-financial corporations
do you want to,
fell to
let's say you're an American.
8% in October, after 7.5%
Do you want to buy
in
a
September.
Ferrari that costs a
This
lot of euros
deceleration has
or a
occurred
Ferrari
in the
that costs
context of abating emergency
less
liquidity
dollars?
needs, weak
I guess you have to put it
investment,
this way.
and tighter credit
Do you want to pay
conditions on
$250,000
loans to firms, as
for a Ferrari
signaled by
or
our bank lending
$200,000
survey for the euro
for a
area
Ferrari?
for the third quarter of 2020.
If it's the same Ferrari, but it just costs you more dollars because
Annual
euro
growth
is
rate
strong,
of loans to households
you don't like that.
stood at 3.1% in October, unchanged from September. Overall, our policy measures, together with the measures adopted by national governments and European institutions, remain essential to support bank lending conditions and access to financing, in particular for those most affected by the ramifications of the pandemic. To sum up, A cross-check of the outcome of the economic analysis.
Yeah,
with the
M1 high
signals
school
coming from
economics.
the monetary
But that
analysis
back in the
confirm
70s,
an
that was
ample
something that
degree of
people watched
monetary
very
accommodation
closely.
is necessary to support economic activity.
How much cash
Robust
is there in the
convergence of
United States, for
inflation
example,
to levels that are
in
low,
circulation?
but close to
Do you know why they don't
over
cover it
the medium
anymore?
term.
I'm telling you, in the 70s and maybe even the
Regarding
80s,
fiscal policies,
measuring your
ambitious and
M1 was
coordinated
like
fiscal
non-farm
stance
payrolls.
remains critical in view of the
Because, for
sharp
example, you
contraction
didn't
in
know
the
what
euro
interest
area
rates were.
economy.
The Fed didn't tell you what the interest
Fiscal
rates were.
measures
They didn't tell you
taken
when
in
they
response
adjusted
to the
interest
pandemic
rates.
emergency
So what you would do is
should,
measure
as much as
money
possible,
supply through
be
M1.
targeted and temporary in nature.
Yes,
At
I
the
am
same
waiting for
time,
Q&A.
Weak demand from firms and households,
So
and the heightened risk of a delayed
why
recovery
don't
in the
we
light of the new lockdowns
follow M1
owing
at
to
all
the second
anymore?
wave
Does
of
anyone
the
know?
pandemic,
If it used to be the
warrant
most important
continued
thing,
support from
why don't we
national
watch it
fiscal
anymore?
policies. The three safety nets endorsed by the European Council for workers, businesses and sovereigns provide important funding in this context. The Governing Council recognizes the key role of
Type in
the
a question mark if you don't know.
EU package and stresses the importance of it becoming operational without delay. It calls on Member States to deploy the funds for productive public spending accompanied by productivity-enhancing structural policies. This would allow the Next Generation EU programme to contribute
It's
to a
because
faster,
they
stronger
don't know.
and more uniform
They don't know how much money is out there anymore. The United States has no idea how many $100 bills are floating around under people's beds in Africa, for example. Or how many $100 bills are floating around South America.
Important in addressing long-standing structural and institutional weaknesses.
They just don't know anymore.
And in accelerating the green and digital transitions.
Yeah, Maida's got it.
We now stand ready for your questions. Thank
You're
you.
sitting. You sit ready.
The first question today comes from Balash Korani at Reuters.
Here's the big question.
I'd like to ask, how did you arrive at 500 billion in 9 months? If you could give me a bit of a rundown, what were the alternatives on the table? What was the discussion? And in the end, was it a unanimous decision? Second question again is about the appreciation of the euro. It's an issue that's come back over the last few months. Was there a discussion about the exchange rate? What was the nature of the discussion? If you could give me a bit of color on what was said, what were the concerns expressed on the FX rate? Thanks.
Well, thank you very much for your question. And let me just sum up what we have decided, and then I'll go into the actual.
She just told you
description
that
of
that's the
package
one
and
question she didn't want today.
Reasons behind it.
She's like, damn it.
What we have decided, as was anticipated as a result of the last October monetary policy discussions that we had, is a recalibration of those instruments that we determined were most effective under the current pandemic circumstances. And it is with that in mind that we decided to concentrate the recalibration on PEP, our temporary, targeted and flexible asset purchase programs that is specifically designed for the pandemic, on TLTRO version 3, which is intended to provide as much refinancing as possible to those banks that are lending to the economy and to offer a very attractive rate for those that actually comply with the objective and the threshold, which is to at least maintain, if not increase, lending to the economy. And then we, of course, decided also on all the measures that come with it, and in particular the extension of the term during which collaterals are enlarged and
look at that, I like the stream. Nice. Nice.
Extension as well of our swap and repo line, and so on and so forth. So we decided, let's take first of all the duration. There was discussion as to how long should the extension be. But why should there be an extension first? Well, because clearly we are facing circumstances that are, in the short term, more difficult, and that difficulty has been caused by the second wave and the containment measures that have been taken as a result of such second wave. I think it's fair to say that we all had anticipated that there would be a possible second wave. It was actually embedded in previous projections.
I still have the Whipsaw
The
song
depth of
open
it,
from
the
Friday.
duration of it and the containment measures associated with it were not anticipated to the extent that they actually occurred and are still taking place. So it was sensible to extend, because of the impact that it has on the economy in short order. And I remind you that the fourth quarter is going to be negative,
Quota.
2.2 we believe, and it's going to carry into the first quarter of 2021. And why did we decide 9 months? Well, it's fairly simple. We are, unfortunately, economists, in addition to having all the economic knowledge and being able to anticipate, also have to be very aware and attentive to health literature and the forecast that scientists have in respect of immunity, in respect of vaccination, in respect of the rollout of vaccinations. And that's how we came up with this 9 months extension, because we have good reasons to believe, and you read the same material, we try to make sense of all of that. We have good reasons to believe that by the end of 2021, with uncertainty associated with it, let's face it, but we will have reached sufficient herd immunity to hope that by the end
Herd
of
immunity.
2021,
Look at
the
her
economy
going
will
on
begin to
behavioral.
function under more normal circumstances, and that in particular the service sector will not be impaired by a lot of these social distancing and restrictions that apply to it at the moment and do not facilitate the growth of the sector. And then, so that takes you into the beginning of 2022. Where
Can you imagine
the
if I wore a
economy
suit
begins
jacket
to
like that
recover
somewhere?
Seriously, recovery takes root, and we are essentially 2 years after the
Men are so
beginning
restricted.
of COVID.
It's
So I think
unfair.
you combine all that, and we arrive at this.
Women have it
this
so
extension
easy.
by 9 months. Now, the volume of additional purchase that we have considered is clearly intended to deal with our focus, which is to preserve favorable financing conditions. And that is really what is...
Come on,
what
guys,
is
swing by the
guiding,
Twitch stream,
our
see if you
actions
like
going
it.
forward. That will lead us to purchase in a slightly different way than we have in the past. As you will have noted in my reading of the introductory statement, we state very clearly, I think it's at the top of page 2 for those of you who have it, we say we will conduct our purchases under the PEP to preserve favorable financing conditions over this extended period. That is our objective. We will purchase flexibly according to market conditions and with a view to preventing a tightening of financing conditions that is inconsistent with countering the downward impact of the pandemic on the projected path of inflation. So it's all nicely embedded in that long and fairly complicated sentence, but that is what has driven our calibration of the additional PEP that we have decided. Now, you wanted to understand what...
I don't have games on my trading computer, never did.
About exchange rate. Let me just remind you our position. We do not target exchange rate, but clearly exchange rate, and in particular the appreciation of the euro, plays an important role.
Yeah,
and
listen to this.
Exercise downward pressure on prices. So we monitor it. We will continue to monitor it very carefully going forward.
You see what she just said?
Thank you.
Okay,
As the
next
euro
question
goes
comes
up
from
in
Michael
value,
Weisbach at CNBC.
prices fall, which means it's killing inflation. And they don't actually want that.
Do you hear me?
Okay.
Yes, very well.
Okay, very well. Thank you. So I have two questions. One, you must have...
That's why I said they should just buy oil, push up prices.
As well, where they were saying that they're seeing a risk of a solvency crisis. So I would like to hear from you whether you think that's a risk in terms of the next phases of that crisis we are currently in. And then also another question on why didn't you touch the rate? Because clearly that would have dragged the rates lower into negative territory, but looking at the package, which kind of touched almost every instrument, why didn't you touch the rate?
On your first question, I think that the monetary policy that we have decided, as well as the fiscal measures that have been decided at member state level, as well as at the European regional levels, combined and, contrary to previous crises, working hand in hand, have managed to provide enough income and enough support by way of guarantees, by way of moratoria, in order to help the economy from all sectors to go across the pandemic and sort of cross that bridge with appropriate support in order to avoid the catastrophic fallout if there had not been those supports. And I think that in that respect, the monetary policy has played a significant role in supporting all sectors of the economy, in making sure that credit flows to the economy and that there is no major fallout in terms of solvency and insolvency. But this is a risk that is clearly looming on the horizon. And that is precisely the reason why we, for ourselves, encourage fiscal authorities to avoid the fiscal, the cliff effect that would result from a removal and the withdrawal of the fiscal measures. And that is also the reason why we have decided to recalibrate our two key instruments, the PEP and the TLTRO, in order to make sure that we continue to provide the necessary support to credit, to make sure that financing conditions remain favorable to all sectors of the economy, in order to go across the pandemic until such time when immunity has been sufficient in order to procure a situation where the economy actually picks up and is in recovery in a sustainable fashion. So I think that, one of the reasons we are acting in that respect now is precisely to avoid that potential risk and to take those companies, those corporates, those entrepreneurs, those households to the other side of the pandemic and to the other side of the economic consequences resulting from the pandemic. Now, on your issue of rate, I want to first of all point you to a clause that you know well, which is, I think, on page 1 of our introductory statement, which indicates very clearly, and that's part of our forward guidance, as you know, which says very clearly, when I read the first sentence, you understood clearly that we decided to keep the key ECB interest rates unchanged, and that is the case. And then I follow with, we expect them to remain at their present or lower levels until we have seen the inflation outlook robustly convert, So, both routes are indicated clearly in this forward
So
guidance.
look at this. We couldn't even get through the first level of resistance.
Interest rates movement, particularly the DFR, is part of our toolbox. And as we have said for all our instruments, we stand ready to continue.
Chemical
to
has a question. Go ahead and
adjust,
ask. That's why I'm
use
here.
All tools available in the toolbox.
Okay, the next question is from Isabella Bufacchi at Il Sole 24 Ore.
Thank you for the opportunity. President Lagarde, I have two questions. The first is again on negative interest rates. On the TLTRO, extended TLTRO, I suppose the -1% is going to stay, and if it is so, how important is this -1 for the banking sector? My second question is on your macroeconomic projections. The pandemic is a symmetric shock, but it has asymmetric impacts, as we know, and you use the word...
A symmetric shock with asymmetric impact.
I wonder if you can say more about these macroeconomic projections on how uneven the recovery will be amongst the member states.
She
of the
sounds
euro
like she
area
talked to
in
somebody.
2021, and if you are worried about further fragmentation. Thank you, and if I may, best wishes to you and to the ECB for
Well, thank you. Thank you so much for your good wishes, and let me say that we reciprocate to you and to all your colleagues, of course, because this is our
Chemical, is your question to me or Kishore?
So turning back to your question, you are right that we are keeping this very attractive minus 100 basis points as is, which is a very attractive rate. Now, let me just pause for a second on that rate, because we should not assume, and nobody should assume, that this is a rate that is available come what may and under no particular conditions and in all circumstances. It's a rate that is
Look at her, she's in
to
boss mode.
incentivize the banking sector to provide financing to the economy. And it is not available.
More coffee!
It's only available
whiz!
if banks actually maintain or exceed the level of lending that they have provided beforehand. What are we doing with this TLTRO new measures? We're doing three things. We are enlarging the volume of lending that can be
So we're being
obtained
spammed on
at
Twitch
those
already.
rates.
Do I want to be
Maintaining the
famous?
rate
No,
rate
that
is
would
minus
be
100
a
basis
curse.
points.
I would
And
never
we are
want to be
also
famous.
slightly changing the reference period, which is the base according to which the volume of lending
Yeah, I love her
is
attitude
or
too.
not
She's
benefiting
definitely
from
got it
additional
all.
100
She's the
basis
real
points,
deal.
to make it a little bit more challenging, because it is a very attractive program.
I think she's smart,
And,
sophisticated,
we think
attractive,
that it
and
has
boss
proven,
mode.
very effective. When we
She's
look
like,
at,
if I was a woman, I'd
various
want to be her.
indicators, whether it is the take-up of TLTROs in June, massively above expectation. In September, still above expectations. Whether it is the volume of lending to the economy, either at corporate level or to households, we're also seeing a significant increase. Less so in October, for sure, for the reasons that are mentioned clearly in the introductory summary, but significantly still. And if you look at the rates at which those
right.
loans are procured to
So now we need to see if we got buyers here.
it is
What do you
virtually
think?
at the
Are we going to
lowest
get buyers
levels
at this
ever.
price?
I think for households it has been once in May
Boop, boop,
2020,
boop, boop.
a little lower than
Boop,
that,
boop,
but
boop.
it is.
I'm going to switch over to
I think it's about 35% for
5 minute.
households and a little over 1.5% for corporates. So on all three accounts, volume of take-up.
Okay, we'll see what happens in here.
Rates at which lending is granted by banks. It's clearly working to the effect that we wanted. Now, the reasons we tried to continue to make it attractive and to enlarge it is because we're beginning to see some signals here and there, particularly in the bank lending surveys, but in other surveys as well, that not so much about the rate.
Hey, Kishore, you
but about
emailed
the
that
terms
to me,
and
didn't you?
conditions that are offered
I think I forgot and I have never
borrowers.
uploaded it.
We're beginning to see
But
a
I
little
should.
bit of a tightening, and we think that
Thank you, Ronnie.
we should encourage, obviously, proper assessment of the risk.
Mr. J.
It's not to encourage, unwarranted lending, or at least not properly assessed. But we think that lending conditions should be
Yeah,
favorable.
I thought so. I'll go back and I'll try to do that today.
You asked me about the unevenness. I think what I referred to was the unevenness between sectors. When you look at past numbers, when you look at PMI, when you look at alternative flash estimates, it is clear that the industry is recovering, and the numbers in general are quite strong. Whereas on the other hand, the service sector is still bearing the
It wouldn't
brunt
matter,
of
Chemical.
the
They're
necessary
indices.
social distancing constraints
It wouldn't
and
matter.
measures that, put a
Especially
brake
on a 4-hour chart. It
on
just wouldn't
service
matter.
sector
Repaint
recovery.
what?
We look at numbers in aggregate basis in the main, and while it is clear that some countries started in this pandemic in a different positions from others, some having fiscal space, some not having it, some having a lower debt level and others having a higher debt level. We very much hope that next generation.
Just remember, it's not showing you
other
price,
tools
it's showing
that are
you
made available,
an
whether it
indicator
is
that's an
SURE,
aggregate
whether it
of
is the
multiple
ESM,
prices over long periods of
programs,
time.
or whether it is the guarantees
It wouldn't-
that will
it wouldn't
supplement,
matter.
The national guarantees
Repainting
that would be
1 minute
offered
worth
by
of data on a
EIB.
4-hour
We
chart
very
would
much
be
hope that
irrelevant.
these programs and the way in which they are provided will actually temper this potential uneven recovery on a jurisdiction by jurisdiction basis. And I remind you that we have designed PEP with that risk in mind.
I'm streaming the
And we have
actual
applied,
European
in the
Central
rollout
Bank
of
YouTube
all the
stream.
flexibility that
So it
was
shouldn't
needed
be delayed
across
by
classes
more
of
than a
assets,
couple of
across
seconds.
time by front loading, and across jurisdictions in order to
Okay, Robbie?
resist destabilization.
But that's, I mean, at least that's where I'm getting it.
destabilization, and make sure that the risk of fragmentation could be kept at bay. Thank you.
Okay, wait for
Okay,
it.
the
Wait
next
for the
question is
bouncy
from
bounce.
Arnold at the Financial Times.
Hello, Madame Lagarde. Can you hear me?
Hello, I can hear you very well, yes. Good afternoon.
Great. Good afternoon. I have two questions for you, both on the duration issue. The first question is, imagine the scenario that...
Well, priced in means you would have made the trade days ago.
There could be quite a strong recovery.
Yeah, this is just
in the
small
economy
traders getting
inflation
cleared out.
next year. Imagine that is stronger than you're forecasting. Would that lead to you curtailing your
PK, I'm a woman, and I want to be her.
the PEP and the Teltros earlier than expected during the course of next year? And secondly, how will the ECB decide when the pandemic crisis is over? On what metric will you look at? Is it on GDP? Is it on inflation? And when inflation is back on course, how will you judge that? Thank you very much.
Well, thank you so much for your question. I think we really tailored the extension of our PEP with in mind
She's
the
giving a pep
potential
talk.
duration of the pandemic-related crisis. Second, we did work on scenarios as well. I did not mention them in the introductory statement, but you will be seeing them when you see the
She needs to
projections
do the Trump
when they're
hands.
published later
Her
this
hands are down
afternoon. So we
low.
worked on
She needs to
scenarios as
go
well to
up
anticipate
here.
a mild scenario, a severe scenario, and sort of tailor our policies in respect of these two scenarios. But the special design of this extension is precisely intended to deal with that situation.
Oh, I swing trade on the 5-minute
And,
chart.
You will have noted that.
But I
as
plan
had
on the
indicated
4-hour,
back in
1
October,
hour.
And the Governing Council had decided. And as I picked it up in my ECB forum on central banking, which would have taken place at Sintra had it not been for the pandemic, we insist on maintaining favorable financing conditions.
What was that rate,
And
eh?
that indeed is a factor of
Can I get 18
what
more
is
people to
the,
subscribe
economic circumstance,
to the
what are
Twitch,
economic
please?
circumstances, what impact it has on credit to the economy, what impact
I'm just trying to
has
bump it
on
up to
yields
50,
across the
and then I'll
board,
stop
from,
bothering you.
corporate to sovereigns, and what we plan on doing is to adjust our purchases on the basis of what is needed to maintain those favorable financing conditions.
Thank you.
So, to take your example, if we have a strong recovery which has an impact on inflation that puts it back onto the path that we had pre-pandemic, then clearly financing conditions would be regarded as quite favorable and would not necessarily require that we do massive purchases. We would tailor our purchases on the basis of favorable financing conditions. Equally,
I think we need 15
if,
more people
we
now.
had
14 more
tightening
people.
of financing conditions.
So we got our bouncy bounce. How long is it going to hold?
with
Come on, Baba.
countering
This is
negative impact
so
of
what you need to do in here to sort of measure your risk is
of course,
pay
we
attention
would
to the reverse
do the right
fibs,
level of purchases in order
because
to
you know
weigh on that.
a bear is going to sell this, right?
The compass, if you will.
So you got to pay attention to that. It's sort of
clear
your
focus that we
risk.
have will be
So I'm,
those
I'm going to measure it a
favorable financing
little higher
conditions.
too, like
And that will
kind of like
entail,
this area.
Variable.
So you got to be
purchases.
concerned until you
So
get
it will
there.
be slightly different from what it had been in the past, not necessarily fixed monthly linear
Okay,
purchases.
you get that?
But
The
purchases
reverse
that will
fib?
adjust
I call it
depending
fib
on market
wars.
conditions in order to procure those favorable financing conditions. When is the pandemic crisis over? Well, as I said, we have tried to learn and read from other scientists, those that know better about viruses, vaccinations, and
See,
how long it
when
takes
she
to
speaks,
reach
I
herd
believe
immunity.
she's put a
And
lot
based
of
on what
thought
we
into
know
it.
today, we have good reasons to
Like
believe
she's not
that,
reading a
the
speech.
end of
She's really put some
2021
thought in. She's really
will
truly
likely
in
signal
control.
the herd
She gets the
immunity and will
information she
extend it,
needs. She's just cool.
at least until March.
How to deal with the fib war? Well, you have to be
recovery,
in at a
pickup
proper
of
price,
recovery,
and then
the,
if it wimps out there, you should probably adjust your stop.
you know, resulting stabilization.
But look
of
at it
prices
this
that
way.
that
If
could
you think it's going to go
operate
up
as a
here,
result
what's
of
the
that.
risk you're wrong?
As you have heard, we
Okay,
say at
very
least
clearly.
until March 2022.
Now you got yourself
And
sort of an
if it
inverse
is-
head and
if
shoulders
it proves necessary because
kind
the
of
pandemic
situation.
is not over, because
So
the economic
if it flips
consequences
here,
are still,
you don't hang on
bearing
because
heavily
you're,
on,
you know, you're like,
economic
I
agents,
know I'm
and
bullish.
we
So
will
even though it's
reconsider
presented one of these
that
things, I'm going
timetable.
to leave my
as,
50
you know,
pip
as
stop.
always, and
Well,
it's
why lose 50
loud and
pips?
clear in the introductory statements, we always stand ready
Okay.
to recalibrate, revisit.
There's
all
only
our
two places
instruments.
it's likely to reverse, here and here.
The next question comes from Georges Solita at Naftaremki. I actually can't say, sorry.
Yes, Naftemboriki. Good afternoon from Athens, from rainy Athens. I would also
Rainy
like to
Arendt.
pose two questions. The first one is...
Aye, it's
whether
raining a wee
it would be
bit.
possible for Greek bonds, with regard to their low investment grade, to continue to be accepted as collateral after the pandemic if some requirements are met, and if so, which would these requirements be? And my second question is, when do you see a rise of inflation to healthy levels? I mean, it has to do with when will the pandemic end. But since the inflation
Need
rate
13
has
more
been
subscribers.
low for a longer period of time,
Would you please subscribe
when
at
do you
the Twitch
actually
channel,
expect
please?
it to reach close
Trying to get this to 50.
the 2%? Yes?
Thank you. So on your first question about the Greek bonds remaining an exception, which they are at the moment, and at a later stage when PEP is over.
Thank you.
This is not a matter that we have discussed at the Governing Council, obviously. In terms of inflation, let me say that first of all, it is disappointingly low. It has been negative for the last 3 months. It's at minus 0.3% yet again.
Hey,
it is,
Kishore, do you know how to make
rooted
installers?
in some specific factors that have to do with the very low cost of
Windows-based
energy.
installers
It has to
that'll
do with
automatically
the
install
German,
all the
VAT,
files for MT4
and it is
and build one for MT5.
in that respect it is conjunctural, but it is also caused by weak demand. It is also caused by lower wages, and it is also caused by the exchange rate appreciation. So we have multiple factors that can explain the situation. Clearly, we expect those rates to improve in the course of 2021. You will remember that in our projection, we forecast 0.2% inflation, followed by 1%. Followed
Well, if
by
you're interested in doing that
1.1%,
for the community, I'm willing to
because
pay
of,
you for your time and your
multiple factors. There will
expertise.
be base effects, there will be VAT, German VAT being reinstated to previous
Email me,
levels.
Wayne at
There will
fxbootcamp.com.
be, hopefully, demand picking up and recovery taking hold, which obviously would exercise an upward
Oh, thank you, Wolfgang. I appreciate the effort.
But for the moment, the package that we have in place and the monetary policy that we are deploying corresponds to these exceptional circumstances and is therefore of an exceptional nature, which is the characteristics of PEP, for instance. So our determination, as is indicated in our monetary policy decisions, is to support, to maintain favorable financing conditions in order to bolster confidence, in order to remove uncertainty, in order to make sure that recovery takes hold, and as a result, offset some of the negative impact created by the pandemic on our path of inflation. And that is with the hope that while at the end of this specific and exceptional program, we can hopefully return to the pre-COVID times, both in terms of output gap and in terms of inflation gap. That's really the intention. And of course, because our mandate is price stability, our ultimate aim is inflation at close to but below 2%.
Okay, the next question comes from Luke Hayton at M&I.
Good afternoon, President Lagarde. Can you hear me?
Yes, good afternoon to you.
Hi. Two questions, if I may. The first is, does today's decision, which sort of emphasizes financial...
Thank you, Zenbreaker.
...mean de facto yield curve control? And secondly...
So what they're asking here is, are you going to buy 3 months or 30 years? Or 3-month bills or 30-year bonds kind of thing? Like, where on the yield curve will you be a buyer?
Sorry, I missed the second part of you. Can you repeat your second question?
Sorry, I talked over him.
Sorry, yes. What does the provision of more cheap central bank loans on condition of increased lending to the real economy do to address concern over the growth of non-performing loans across the euro area and in some countries in particular?
Okay, thank you. Well, first of all, thank you for your questions. On the first one, let me try to explain what we are doing with our monetary policy. There are 3 elements which characterize our policy. The first one, you've picked it up yourself, is preserving favorable financing conditions over the pandemic period. And this is crucial to build that bridge across the pandemic.
There we go. She's going Trump style.
Reach herd immunity.
Lots of very smart people like our policy. Very smart people.
The economic recovery is well advanced, is self-sustained, and inflation is back to its pre-pandemic path. That's what we are trying to do. Second, to deliver that commitment, as I have explained, our purchase envelope can be used flexibly. You've heard me many times talk about the flexibility across temporality, asset classes, jurisdictions. I'm talking about a slightly different flexibility here. Because
thanks, Big Pippin.
Mean to do is to scale our purchases to whatever is needed to preserve the favorable...
Oh man, we need 9 more subscribers.
And while the volumes that we have, what is left under the previous PEP, over 600 billions, plus what we have decided today, it allows us for a significant constant market presence. The envelope does not have to be spent in a predefined way, or even in full for that matter, so long as financing conditions
500 billion
favorable.
People said we couldn't do it, well, we did it. We're the greatest central bank in the whole world. Very smart people will agree.
Adjust all our instruments as appropriate to ensure that inflation moves towards our aim in a sustained
Look what
manner.
Shug did. Is that a Kraken? What the heck is that?
We define favorable financing conditions in a very holistic way. So we're not looking at one single sector or one single indicator. We're looking at lending rates lending rates to corporates, lending rates to households. We're looking at corporate yields. We're looking at
Look
sovereign
what Shug
yields.
did. That's beautiful.
We're looking
I
at
don't
the
even know what that
supporting
is.
of credit flows to
Squid.
the economy.
It's a squid. I'd call it a
We want to
kraken.
make sure that those financing conditions remain favorable for all sectors of the economy. So those will be our...
You notice she doesn't like
our
pause for
targets
4
and our
seconds like
measurements.
Biden does. Like, wait,
On
what
your
was I
second
talking about
point,
again?
You know, it is obviously
Oh, yeah.
for banks, who are the lenders ultimately,
Biden just drifts off. He's like, was
and
that
to
a
manage
butterfly?
risks and to take the appropriate provisions.
Wait, I'm in a
to
debate.
request
That's right, a
appropriate
debate.
Guarantees. Our job as central bank is to make sure that financing is available.
Yield
and
curve
available,
buyer. Very
to
cool,
banks
man.
that are
Yield
doing
curve
their
buyer.
job of lending to the economy and financing economic agents.
Shug says it's a squid. I say it's a kraken.
The next question comes from Guillaume Benoit at Les Echos.
Guillaume Benoit. What a great name. 8 more subs. We need 8 more subscribers, please.
You might be muted because we can't hear you.
Excuse me, yeah. Can you hear me?
Now we can hear you, yes. Yes.
Brilliant. PhD here.
Sorry for that. Well, I added the answer to one of my questions. The other is that there are growing concerns about the fact that with the increase of the PPP envelope, the ECB may struggle to find bonds to buy due to the self-imposed limits of detention. Are you confident?
And we're going to have a problem with that next year, too. We're going to have a shortage of issuance next year, I think, on the commercial side of the bond market.
No, it is not. It is not because we have said over and over that any self-imposed limits that would impair the conduct
MP
of
project. Thank you very much.
would not stop us from conducting monetary policy. Added to which, I think that if you look at the level of issuance that is forecasted for 2021, 2022,
Thank you, everybody.
both at national, at supranational levels, at agencies level from which we buy, there is quite a lot that is coming. But the key
I want to do
principle
a
is
squid. Is that how you do
self-imposed
it?
limits will not be an obstacle to the proper delivery of our monetary policy.
Okay, and the next
Yeah,
question
there it
is
is.
from Mark Berndeman at NSA Handelsblatt.
Hello, President Lagarde. Can you hear me?
Yes, thank you very much. Hello.
Thank you. Yes, I wanted to ask you 2 questions. You said there was discussion
What else is there
in the
besides-
Governing Council about the length of the extension of the PPP. So was today's decision unanimous? And my second question is about climate change. Your colleague, Governing Council member Jens Weidmann, said in his speech recently that there is no mandate for an active role of the ECB in the fight against climate change. He said an active role in climate change policy could undermine our independence and ultimately
So only
jeopardize
squid,
our
huh?
ability to maintain price stability. Would you agree with this view? Thank you.
I agree with many views of Jens Weidmann, the governor of the Bundesbank.
Yes, you can't
On this
argue
issue
with
of climate, I
Jens
know it's
because
very
he's
tempting
plural.
to oppose my views and the views of
what's the
of
Facebook
my
link?
colleague and friend Jens Weidmann. There are lots of things that we agree upon, and I think that he's equally concerned as I
Let me
am
see if I can-
about the impact of climate change on our economies. I think that those issues will actually
we're still messing around here.
come to a head when we have
Is this it?
the debate about climate change, which is an entire
day
chapter of our
ago.
strategy review.
Live.
Because, and this is a view that I hold very firmly.
If you prefer Facebook.
Of substituting government, it is not a question of turning ourselves into a fiscal agent or into a regulatory
Live.Forex.Today.
Universe of climate change measures. And I think on that point I would completely agree with my colleague and friend Jens. Equally, I believe that in everything that we do, we have to be mindful of climate change impact in terms of risk and in terms of delivering on our mandate, which is price stability. And one of the debates that we will have as part of our strategy review is whether or not the direct and indirect impact of climate change have a bearing on our primary mandate of price stability. I happen to think that it does. Now, there might be different views, but I think we should debate those views, and we will do so.
Twitch is Illuminati. That's pretty funny. I missed that one too.
We have to look at our various portfolios, our own portfolios, our pension portfolio, as well as our monetary policy portfolio, to make sure that we assess properly.
Come on now, are we going to hold here or what?
I'm very happy that the European Parliament has moved forward with taxonomy, that the Commission has now developed the soft law that is associated with that taxonomy, and will continue to develop even more work in order to make sure that we have the whole range from the very, very green to the not so green at the other end, so that we can have a proper...
Man, I need 6 subscribers on Twitch. Come on, 6!
The obligation to disclose and explain that will hopefully
6 more!
be applying to banks in short order.
I think all you guys are doing Facebook.
That they themselves conduct the due diligence in order to make sure that they properly assess the risk of
2 more.
counterparty. So,
thank you, everybody.
Let me also mention that we are trying to make progress step by step, and in so doing, we have enlarged now our bond purchasable universe by now accepting, as of January 1st,
oh, I see. Everyone's
bonds
waiting to be number 50.
Variable coupon that are a factor of ESG criteria. This used
all right, it's looking all right.
We have now
it's looking okay.
To accept and enlarge the green bond.
It's looking okay.
Which we can buy, and of which we are a significant purchaser for that matter. So on climate change,
spread's only what, a half a pip?
We're going to continue that discussion.
How awesome is that?
And it's, as I said, it's not a question of substituting for other authorities who have to do the job. It's not for us to regulate. It's not for us to produce taxonomy. Others have.
We're in a swing trading group, Addy. Half the people in this room are in the swing trading group.
Those risks and the direct and indirect impacts that it has on the natural interest rate, that it has on the price stability objectives, and the impact on inflation of, for instance,
coat hanger. I know what you mean.
Weather circumstances or drought. Or,
I'm just hoping one of these other services has a better alerts
if and when it comes,
than YouTube, because I think YouTube is very inconsistent on sending you guys notices that I've started the stream. But maybe the other services are better.
We are out of time, so I can take at least 1 minute. Both of us, we take the time to wish everybody happy year-end, happy holidays, and we look forward to seeing you on the other side of the pandemic, of course, but on the other side of the year in 2021. Thank you so much.
Thank you, madam. Madame. Thank you, madame. That was cool. All right, so we'll see if we get our ups from here. Thank you, Catwoman. Oh, man, who's going to be number 50? Who's going to be number 50? Who was it? Kishore got it, I think, right? That's perfect timing, huh? Waited. Bo! Kishore got it. Nice. Talk about patience, huh? Cool. Right on, everybody. Woo! Hooray! That's so funny. Cool. So look at this. Look at it. Go, 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 go. You notice how the trade weighted? Well, there's the before the news trade and now after the news trade, right? Yeah, Joe's always boss. Yep. Boss mode. No, it's not a head and shoulders craft. No. No, 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 no. Okay, it's not a head and shoulders. It has to be the top of a trending move. It's not. This is just short-term volatility based on a news event. It's not nothing. I mean, there's some fundamental change, but but not much, right? So this is just people. Like I said, there's the scalp before the news, and I drew this gray area, by the way, before we hit it. So right, and then there's wiping everybody out, and then this is going back in the direction of your fundamental trade. So if you were a bull, this was probably your buy zone for tomorrow. You're just picking it up today. But don't look at this as a reversal pattern. A reversal of what? Okay. Always ask yourself before you trade a reversal pattern, what exactly are you reversing? You have to have a trend that you're reversing. It's not even on this time frame now, backing out with this much information, it's not even a double top. Okay? So I tend not to pay attention to those unless you're at hardcore resistance anyway. So like if we were trading it, here, let me put this in like, let me put this in position. Okay, let me put this into a position trade. So if it was happening at 121.64 or 122.44 and then you got a head and shoulders, then yes. But it's just floating out there in this, three-wave correction, if you want to call it that. So no, don't overstate its value, right? Okay. All right. Everything else seems to be doing fine. Pig, I exited yesterday, so I'm done with that. That's fine. And looks like, yeah. Anyways, so that's fine. That's fine. That's fine. Take a look at the yens. Little changed. A little change. Everything's fine. Everything's golden. Except pound. You see pound? I exited it. It's not favorable to my risk. This one I'm going to have to pay attention to. I'd like it to stay above 73.50. I don't want to do another round trip. And how we doing on this one? Seems to be fine. Remember, we want this up another week and then down in January. Maybe, right? And then Aussie. Okay. So now following up with this, here's the exit, here's the roll reversal. Okay. Here's the next roll reversal. Here's the new roll reversal. Okay. The other thing you could do on this is play the 21. But remember, not where the 21 is now, where it's going to be in the future. Oops. Ah, man. I keep clicking erase. Okay, that kind of thing. Insert indicator, custom, zero lag moving average. Hang on, just doing my chores. There we go. Okay, so what is this telling you? This is telling you, so you know the strategy here is to buy it off the 21, but it's lagging. So you can adjust that and say, where's the 21 going to be in the future? And it's saying here. Because very often what you do is you don't trade off the 21 when you're supposed to. And then you look back and then because it wasn't touching the 21, you didn't trade it. And then you show up in a day or two or three, depending on the time frame, you look backwards and you're like, man, why didn't I buy it off the 21? Well, because the 21 wasn't there when you were looking at it. So this is one of the tools on MetaTraders where you can have your zero lag. Okay. This is a non-lagging 21 EMA. So you could do it like this. Okay. 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 You like that? So you can see the evolution of what we were doing, or what I was doing in the early days of me trying to figure out how to trade Forex on my own. I wondered why, like, what could I do to know that that doesn't make me bearish? What do I need, right? That's what I was asking myself. What do I need? And that's where I did stuff like, I need more information, right? So I'd go indicator, trend, moving average, and, oh, good, perfect. Okay. And I realized that this keeps me in the game. And then I need some sort of trigger. So one of the first things I was like, well, if we break above, then I should be long, right? And this one was the easy one. And now here's the third one. But then I refined it with the 5/8. So I realized, okay, I got the market down, but then the evolution of what I wanted to do, I mean, this made me a bull. And this made me conservative, but not bearish. And then this was back game on again, right? Riding this 21. But then I realized by the time I got in, I would be here, right? So, and I hated these pullbacks. So I'm like, well, I need to get in earlier. And so then I started playing with the short-term moving averages and started getting myself into at this point instead of that point. And so, you know, I started building and stacking. Okay. How do you get the zero lag? It's in the complete toolkit at metatraders.com. It's not on the $5 package. No, in the complete toolkit. Now, the $5 toolkit has 200 files. 200 files. That's why my programmers keep quitting on me, because they're like, dude, this sucks. So I'm like, I need a version for the $5 kit and the toolkit and the complete toolkit. And then I need, right? So that's 200 files, and you got to do another one, another 200 files. And then you got to do it for MT4. So 2 of those for MT4, 2 of those for MT5. And you're like, so it's 200 plus 200 plus 200 plus 200, like one file at a time. And they're like, it sucks. It just sucks. It's just boring, stupid work. And people quit on me. It's amazing. Anyways. So, but of course, you don't need any of this, right? Because you can just do price action. Dude, it's a role reversal. It's not complicated. Okay, let's do it like this. Let's thin this out. Look, it's a role reversal. But these things help. I mean, they're helpful. Do you need them? No, but they're helpful, right? Yeah, that's right, guys. The link is in the description below the video to get to metatraders.com, to get to tradersway.com, to get to fxbootcamp.com. That kind of stuff. Is anyone interested in joining my live trading group? We meet today at 2 p.m., so I'm going to start pulling the plug on today. But we're going to meet at 2 p.m. and wrap up this week, set up next week, and then kind of wrap up the year, all that kind of stuff. Okay. Okay. And by the way, if you used to be in the swing trading group and then you went to the professional track with Ryan, and then if you quit that or failed out of it or something like that, you're welcome to rejoin me in the swing trading group without paying the $400 sign up fee again. Okay. Chemical says, don't have the money right now. Well, we do buy and sell money. So if you don't have money, you don't have an inventory. So you definitely need some money. Yes. Stochastic is 853. All right. So let me throw this down for you. Standard FX Bootcamp setup. And then you do this, okay, 853. Swing trading is at 2 p.m. Remember, we're setting things up so by the time Monday happens, you're already profitable, well on your way. That's what our goal is. We're targeting, 200 to 300 pips profit. And then in there we throw in, sometimes seasonality based position trades or monthly swings as well as weekly swings. Most people in the swing trading group have also completed the day trading course. So we kind of do a little of everything. We do a lot of fundamentals. We do a lot of trader psychology. We do a lot of, day trades, swing trades, and position trades because they're all kind of one and the same. Okay, for a whopping $99 a month. And a lot of what we do is group work. So we do a lot of group work. It's just not me sitting here doing the same things I do in these webinars. We do a lot of group work. So you get a lot of personal feedback from me, but you get a lot of feedback from the group. You get used to explaining and talking the business, which I think is important if you're going to raise money. Right? You need proper experience explaining what you're thinking. Okay. Also, very often, some people are newer, so they come out and they do a presentation to the group, and I see the things that they're missing, and they very quickly learn. I'm like, well, this was my concern. This is what I thought here. What were you thinking there? What do you do in this situation? What is your thought process? Where and why? And you're asked these types of questions, and it really uncovers not just your strengths, but your weaknesses and things that you should be working more on. Of course, you can always go back and do the videos and all this kind of stuff. So it's a pretty powerful group, in my opinion. There's a lot of people that have been in the group for a year, let's say, or more, but let's say quite a few that have been in for a year and are doing very, very well, at least the feedback that I'm getting. They're doing very, very, very well. So, anyways. Bitcoin? Yeah, I can do Bitcoin quickly. Okay. Commodities. Okay. Cool. So, what time frame do you want me to cover this? Well, the first thing is, right, on a daily, we got this going on. A breach below that is probably significantly lower. Okay. So it's disconcerting in the moment. It really depends what it does in this area. And you don't need to be the first one in on this trade. So I have some concerns. But if you were trying to thread this needle, I would look at it from a double bottom point of view, okay, it's telling you that you probably shouldn't buy it any lower than it is now. And if it goes lower than this, you should probably back away. That's from a day trade point of view. Now, if I change this to, let's say, let's check the swing on this. And not good at all. And then we'll take a look from a December point of view. Okay, I'm only looking at this from a bull point of view. Okay. Oh, what did I just do? Did I kill it? No. Oh, hang on. I probably have to refresh this. Oh, it doesn't work on Bitcoin? On daily? What? Well, on monthly it doesn't work. Or is it just so out of position? Let me check this. Huh. That's interesting. I didn't know that. It won't do monthly. Why would that be? That's interesting. Why is it not doing? Is it just too much data? Let's just do 3. Maybe it's just too much data. Yeah, it's just too much data. All right. All right. So the obvious trade here earlier was buying it at like 16, right? But that was Thanksgiving. So now what? On a daily basis, on a monthly basis, yeah, that's okay. Where we are is okay, but probably not today, because this is where it started, right? I think there's a lot of profit taking on this one right now off of obviously the 20,000, right? So it's mediocre. So see this area here? That's the area I'm focused on. Like it could go up here, but I don't think I'd be the first one on this trade. I'd let some new money come in and turn it north. Right now it doesn't look like it, but we're at 18,000, right? So there's something going on here a little bit. I would probably wait for some sort of breakout pullback. Right? Yes, you can jump straight into the swing trading group if you've done the courses, but if you did the courses 3 years ago and you haven't done the day trading course, if you haven't done the swing trading course, then you still don't know. So it really depends on when you did it. But if you did it this year, yes, but you won't get access to, I think, some of that content. But the answer is yes. So email me, wayne@fxbootcamp.com. If you've ever been in the swing trading course before and then left, right? And now you want to rejoin, or if you've taken all the video courses, let's say this year or last year or the year before, and you want to rejoin, but you don't want to pay for all the courses again, then yes, email me, wayne@fxbootcamp.com. Okay. Quick Shug says, hey, you think 17 will hold? Well, that's not what I'm looking at right now. So to me, irrelevant, right? So right now this is the only thing. Now, if I go back out to daily and you're like 17, I'm looking at more like 16 or 15. So you think 17. See, remember, I don't think, I only do analysis. I ask the charts, right? And I don't see 17 as being important at the moment. I mean, it could be, right? I mean, but I'm not ready to make that determination. Like 17 and a half is much more interesting than 17. 16 and a half is much more interesting than 17. So 17 is sort of a round the way sort of price that you're picking in here. And I'm like, that's not really interesting to me. Okay. Okay. Yes, and by the way, if you're in my swing trading group, you need a microphone and a camera because we do group work. And if you can't afford a $14 microphone camera, then don't spend the money on the course. Okay. All right. Well, that was a Thursday, so I got to go. We are meeting in, what, 4 hours? Is it 11? 3 hours? No, it's 10. 4 hours. So we will be doing the swing trading group in 4 hours. So if you join, the link is in the description below. You have to go to fxbootcamp.com, sign up for the videos, and then you'll be invited to join the live group. And if you do that, jump straight into the swing trading course and day trading course as soon as you can because you will be joining the group. And you're allowed to ask stupid questions, but not too many. Okay. So anyways, thank you, YouTube. Thank you, Facebook. Thank you, Twitch. Thank you to you. Thank you to just the whole Forex.Today community. Thank you to Traders Way. Thank you to everybody that's involved in the awesomeness and the good vibes that we create every day. And peace on earth. May the pips be with you. May our profits be above average. Cheers.